Well, I think we'll get started. Good evening, everyone. Welcome to today's special webinar focused on the topic of crypto adoption. My name is Ian Simpson from Bitcoin Suisse, and the title of today's event is called Widening Crypto World, the State of Global Crypto Adoption. And this is an event co-produced by the Crypto Valley Association together with Bitcoin Suisse. It focuses on our quarterly themes report, which we publish at Bitcoin Suisse of the same title. And tonight we'll start with a presentation from our head of research, Dr. Raffael Huber, who will talk about the paper, what is going on with crypto adoption, what we see, and what we might be able to expect in the next few years, and also some of the driving forces behind that. Of course, if you want to read the paper itself, you can find that online at our website at bitcoinsuisse.com. But Raffael will be walking us through the paper. And then afterwards, we'll have a panel discussion with some great panelists from the World Economic Forum, from Genesis, from Linum Labs. So we're looking forward to that very much. There's also a chance for you as audience members to ask questions. We'd ask you to just drop those questions into the chat here in the event. And as time allows, we'll take as many questions as possible and hopefully have a great discussion. So with that, I'll turn things over to Dr. Raffael Huber, who will be presenting the paper and talking about crypto adoption.
Yeah, thank you very much, Ian. Welcome also to everyone from my side. Let me just quickly share my screen. All right. So it's my pleasure today to present to you our latest Bitcoin Suisse themes, Widening Crypto World, the State of Global Crypto Adoption. And I would like to start things off with a quote from Nayib Bukele, the president of El Salvador, that of course, El Salvador, the first country to adopt Bitcoin as legal tender, that this is going to be good for the country, for the people, for investors, and good for innovators. So how did we actually get there? What is the state of global crypto adoption? To guide you through the presentation a little bit, we'll start off with a short introduction of the topic. What is actually crypto adoption? What do we mean by that? There's two types, either the investment type or the grassroots adoption by retail payments and so on. Then this is really a global phenomenon. We'll have a look at the view from developing countries as well as from developed countries, and then speak a little bit about the global crypto nation and what this whole movement actually is. And then we'll conclude with some questions that often come up also in terms of will crypto be banned, will crypto be strongly regulated, and so on, and where does this all lead in the long term for adoption. So the big news this year, of course, has been El Salvador adopting BTC as legal tender on June 9th. One of the reasons that they actually did this was that a lot of El Salvador's GDP is relying on remittances, so about 20%, which are much cheaper and much easier to do using Bitcoin than using traditional payment rails. Another advantage of the move is that currently more than 2/3 of El Salvadorians are unbanked, do not have a bank account. And with Bitcoin, you basically get a bank account in your pocket, on your smartphone, always accessible, very easy. It should also foster economic growth and more foreign investments, being such an early adopter as a whole country. And if you would like to become actually an El Salvadorian and get residency there, all you need to do now is to invest at least 3 Bitcoin into the local economy, and you will get the residency permit. They didn't just adopt Bitcoin as a currency, though. They also try to support the infrastructure with renewable geothermal energy mining. So the president announced a $200 million mining program that they're going to build using energy coming from the local volcanoes. Now, for many in the crypto community, this has been a watershed moment, something that was long expected, but so far didn't happen, and now it actually did. It was the first country to do so worldwide, and yeah, this is basically the first stepping stone to real mass adoption. Of course, not everyone was equally excited about this. So there has been some backlash from policymakers such as the IMF, saying that it's actually not clear whether El Salvador can benefit from the same support if they're using also Bitcoin as legal tender. And there have been a lot of there can be a lot of positive societal effects from doing this, such as easier access to banking services, bank in your pocket, easier remittances, but also access to a harder form of money than maybe some of the government-issued currencies. I will speak about that more in just a minute. What I think is also important, especially with the recent focus of the mainstream media around the Bitcoin energies consumption and this whole ESG topic, with institutional investors getting into the space, is that people mostly focus on the E, but it's not all that there is to ESG. So these societal positive impacts should also be considered. Now, crypto is a global phenomenon, and this is actually clear if you look at the data. Crypto is being used in more than 140 countries, as the latest research of using on and off-chain data shows. The grassroots usage, so really by people as a means of payment and so on, is highest in the Ukraine, Russia, and Venezuela, and it's used as a store of value for remittances and increasingly also for business transactions. Now, looking at the different parts of the world, if we look at Africa and Latin America, and there we have mostly low volumes, but for the people there, it's a high value add because they have somewhere to put their money to maybe earn a little bit of interest, be that in Bitcoin or any other cryptocurrency, maybe even stable coins, that is not easily accessible otherwise. Then Asia is, of course, a behemoth in the crypto space. It accounts for 1/3 of the global activity. And also in Asia, stablecoins are very important, especially Tether, as we'll speak about in a moment. In China, many people are using Tether to actually do business transactions and also some cross-border payments. In North America and Western Europe, people getting involved are mostly investors, doing it for investment purposes, but also to build out the infrastructure, actually. And of course, over the recent months, we have seen increasing interest from the professional investor side, from institutional investors, and crypto is now, I would say, relatively firmly in the minds of people as a new asset class. Then in Eastern Europe, people are using it because they have some distrust in governments and in banks in general. It's not so rosy as it is, as we sometimes think it is, as somebody who is Swiss. It's not like that everywhere in the world. But in Eastern Europe, it's also used for illicit activity. But to say this, to mention this again, the illicit use of cryptocurrency in the grand scheme of things is minimal, both within the crypto space. So looking at the percentage of transactions that are actually related to some type of illicit use, it's minimal. And if you consider the whole volume of crime-related monetary transactions, then it's really a non-factor. So this is another picture that is sometimes painted a little bit differently in mainstream media. But if you look at the data, the illicit use of cryptocurrencies is really minimal. And for me, this always makes sense. It doesn't make sense to use cryptocurrency because you're basically recording all the illegal activity that you're doing on a publicly available ledger for many, many years to come. Now, if we look at the individual countries and their adoption, like I mentioned, the top 3 are Ukraine, Russia, and Venezuela, but also larger countries like China and the US have shown significant crypto adoption, people getting interested. We have some participants also in Africa, Kenya, South Africa, and Nigeria, and then many more countries that have slightly smaller percentages than these top 10. Now, if we look at the developing countries, what is actually behind this activity? Like I mentioned a few times already, the remittances is a big part. Using crypto for that is much cheaper than what you typically get. Typical rates are around 6 to 9%, sometimes even higher within some regions. And with crypto, you get basically a fixed transaction fee that can be much, much lower than these high percentages. And sometimes it's also the only option. So let's say a country is maybe cut off from the international banking system due to sanctions or so and so on. Then crypto becomes the only options, and people will of course do whatever it takes to send money home and support their loved ones. It can also act and be seen as a store of value, especially in countries that have high inflation rates. Often there the access to some other currencies like the US dollar is also not so easy. So crypto offers a way out, or at least acts as a bridge currency. We have this, for example, in Argentina or Venezuela, and there has been a very nice report that we also mentioned in our themes that studied this activity by tracking volumes, trading volumes on these currency pairs during power outages. And you can also look, if you also include stable coins, then China is an important player in the whole market. Tether is used very much there. China has some capital controls that is sometimes prohibitive for business owners, and they use crypto, in this case mostly Tether, to circumvent these controls. Then another trend that can be noticed is that activity in the crypto space is typically growing with increasing distrust in the government. So during political turmoil and so on. In this case, crypto is then often used to replace some older, already existing system within local communities, such as using vouchers to pass on to each other. But it's not all related to negative effects, basically. It's also used increasingly for business transactions, for example, cross-border trade between developing nations and China. And one important player in this whole, in the market in developing countries are also the peer-to-peer exchanges. So the way these operate is like a typical exchange, except that they do not have a matching engine. So it's more seen like an eBay for crypto, where you can pick, yes, I would like to buy this much Bitcoin for that price, and some names that hold a significant market share in this market are Paxful or local Bitcoins. Now, the last point, which is something that we typically associate with grassroots adoption, is retail payments. One example is El Salvador's Bitcoin Beach, which is a coastal region that is basically entirely doing their business in Bitcoin. You get paid in Bitcoin, you pay in Bitcoin for your services, for services and goods that you consume. But also outside of El Salvador, there are some Nigerian companies that allow you to pay, for example, for your mobile phone bills through Bitcoin. And there are businesses in Kenya that increasingly use crypto despite their central bank actually warning about the volatility of cryptocurrencies. Now, the view from developed countries actually is still very much focused on investment, but there's also a growing interest in other aspects and where crypto can actually add value in the long term. So there's this rising interest can be seen both in the aspects of blockchain use cases, some of which we covered in the first themes that we published actually, and then also for investment purposes by corporates, which we covered in the second theme. So I will not go much more into detail there. An interesting statistic is that 1/3 of small US businesses accept crypto for their services, which is, I would say, quite a significant number already. Then also in Switzerland. Switzerland is, of course, still a leader with the crypto valley, and Japan has also been historically important and keeps being important since it allows crypto as a means of payment. And it was the country that had the first large Bitcoin exchange with Mt. Gox which then unfortunately went bankrupt and caused some pain to many Bitcoin holders, I would say. And another interesting stat that just came out very recently was that the Visa crypto card spending has now topped 1 billion in the first half of 2021. So that's quite a high number by itself, but it also shows that the growth is actually significant. The demand is there for these types of services to use these new new payment rails, and then your crypto investments also productively in your everyday life. Now, last but not least, of course, there are also some people taking their salaries in crypto. For example, some NFL players have been very vocal about this and trying to support this whole movement. Now, the global crypto nation. What is the global crypto nation? It's basically a story of shared ideals. So what people into crypto typically like is that it's independent, it's a natively digital currency, and it provides access to financial services, especially in uncertain times, which can be important for developing nations. And in the developed nations, it's more about the uneasiness with the current system. So nobody really knows where this big experiment of money printing goes in the long term. We have some ideas, but we cannot know for sure. And just in general, the current financial system that we have is rather old already. There haven't been much changes to it over the past 10 to 20 years. Settlement times are still very long and haven't been upgraded despite everything else being digitized and becoming faster and faster. So having cryptocurrency just as an option is valuable by itself. Then it's a global community. It's permissionless to access, and it's mostly people trusting in the logic of code and cryptography rather than some government or some institution like a bank. This new infrastructure is also innovative. I would say the innovation in crypto is happening at an astonishing pace. It's very efficient in terms of settlement. So you do not have to wait for 2 days until your transaction is through. Typically, this takes seconds or minutes. And it's inclusive due to its permissionless nature. And as such, this can also be a catalyst for new jobs, for economic growth, and bring the whole world basically forward. Now, one issue is, of course, with that, it's innovative and all that, but it challenges the status quo. It throws up some questions whether this is actually this is the way that we want to go, and this brings also with it a lot of regulatory uncertainty. We have seen some improvements of this over the past years. I would say mostly the past 1.5 years or so. But there's still a lot of open questions and a lot of gray areas that we're not really sure how to deal with. And the question that every country basically needs to answer is, do we want to embrace cryptocurrencies and blockchain, or do we want to rather lean towards a ban? And this can also be some sort of soft bans by putting some really draconian taxation laws on it and so on, which would lead to people not being able to use it as freely as they would like to. And just a little bit more on this question, and this is also the conclusion. And the big question to answer is actually just, is there long-term value? Is there long-term value created for the real world by cryptocurrencies? And this is, for me, this is incredibly tightly linked to the question of, will it be banned? Because of course many people are afraid of a full government ban and what it would do to their investment, but also to their to the industry as a whole. And I would say that if there is a long-term value that is created, and I'm convinced that there is, then it just becomes a thing of game theory whether countries are going to adopt it. So if there is long-term value to be captured by adopting cryptocurrencies and by embracing this new technology, then any country that bans it will stifle innovation and it will be at a competitive disadvantage. And if you look at the history, basically, whenever a country wasn't aware or didn't jump on the train of a paradigm shift, they were basically left behind and lost part of at least part of their share in the global economy. Now, the value that is being created that we can already see today in various countries is, for example, in terms of payments, in terms of settlement. We can see new business infrastructures built, new hierarchies, basically new organizational templates, such as decentralized autonomous organizations or DAOs. And you could even see in the long run entire circular crypto economies building on top of this whole new infrastructure. What I think is also important to mention is that crypto and fiat are not mutually exclusive, in my point of view. For example, if you have a CBDC that is interoperable with a public blockchain and can be used to access this new infrastructure, then this will be very valuable. And we are seeing this today already, that the demand is there for something like that by the explosive growth of stable coins. There are now more than 100 billion of digital dollars already circulating on this new infrastructure. So the demand is there, and the question is just when are countries ready to embrace this and to connect their currency more directly to this open infrastructure. Of course, there's also a large, vocal and powerful community building behind cryptocurrencies. So that also speaks against the ban. At least there will always be a part of the population that embraces this shift and that is willing to adopt what's coming. And I would say to round it all up, this next stage of where our cryptocurrency is going to go has really been kicked off by El Salvador adopting Bitcoin as legal tender. And it will be interesting to see where we end up in 5, 10, or maybe even 20 years. So yeah, that's already it from my side. Thank you all very much, and I'm open to taking any questions, of course.
Thank you very much, Raffael. That was super interesting. Thanks for the overview. The complete picture of the themes paper. Again, you can read it for yourself later, but we'll start the discussion, and maybe I'll just kick things off with one question to you from my side. The paper highlights, and you highlighted also just now, developing countries, developed countries. This is just in the natural world or in normal terms, there are great divides. Where would you say the actual balance is when it comes to crypto adoption? Is it actually being driven more by grassroots, people using it and seeing the potential to change their lives fundamentally, or by investors who are perhaps bringing large amounts of capital and raising markets from the developed countryside?
I think both play an important role. So if you have just the one, if you have just the investors but nobody's actually using it, then where's the long-term value on the one hand? But if you don't have the investors, I mean, certainly it's very clear that of course people are building also in when markets are bearish, and some developers actually have said that this is the best time to build something because you can take your time, you're not being asked by a community all the time when this, when that, and so on. But I would say this also attracting capital makes it very profitable also for talent to go into this space and to engage with what's possible there, with building new things. So I would say both are important. Of course, in the developed nations, we are looking more through the lens of an investor, maybe, and in developing nations, more of more direct use for everyday life. Just having a savings account that doesn't lose 40% a month to inflation, while being cut off from the US dollar as an alternative store of value, is certainly something to consider. And yeah, so overall, I would say both are equally important.
Mm-hmm. And just to follow up to that, of course, as you said, in developing countries, it's maybe people looking for a quote unquote better way of survival. versus people in developed countries looking for a way to get ahead. But do you think that blockchain and crypto offers an opportunity for that to level out so that people in developing countries actually can do investment more easily and actually get ahead faster?
Yeah, I mean, certainly. Market access is free in crypto. You can do whatever you like, more or less, and that's not something that's guaranteed, right? And I would say, yeah. So over the long term, of course, this will level out. But maybe one thing that I should add is that in some cases you can also see this being relevant in the also in developed nations. So, for example, there has been a DeFi protocol, MakerDAO, which has actually given a loan to a real world business that is now building some auto parts shop in some part of the US. And you can already see how simple it is to get a loan just in this new infrastructure. You can go to the protocol, deposit your collateral, and get a loan instantly without going through the hoops of what you would have to go through at a bank. Of course, that's all over collateralized loans, so that's a little bit different. And the types of collateral is mostly cryptocurrencies today. But I think this just points to where this all could go in the future. If you could easily pledge your assets, maybe have them represented by an NFT on the blockchain, and easily get a loan because you are in need for some cash.
Mm-hmm. We'll take a couple questions from the audience. One is, of course, COVID. How has COVID, in your opinion, affected adoption? Some of the numbers maybe that you showed were pre-COVID or maybe not. I'm not sure. What do you think the impact of the pandemic has been on crypto adoption?
I think it has led to an acceleration of the adoption. So, like in general, we saw that people are this trend of going fully digital, like we are having this this event now, has already started before. But COVID was basically a catalyst for all of this. People are now very comfortable working from home. They're very comfortable paying with something without touching anything, credit cards and so on, smartphones. And I think it all just it was a catalyst in the sense that now it feels a little bit more natural to just have some money on your phone or your hardware wallet in some cases than just on your bank or in your analog wallet, so to say. So I would say it has been a catalyst. It's certainly been also a wake-up call for some that have ignored this for too long. And yeah, I would say it's one positive thing to come out of all this hardship that came with COVID.
Mm-hmm. And one other question we'll take before we move to the panel discussion. We've seen some actions by larger banks, including Barclays, blocking transfers to Binance, and there has been some resistance, which you mentioned also in the presentation today. How do you think that actually plays out when it comes to crypto adoption? Is it kind of like, you know, the lady doth protest too much? Banks are trying to fight hard, but in vain, or will this actually have an overall negative effect on crypto adoption?
Well, you know, this type of stuff always reminds me a little bit of this old saying of first they ignore you, then they laugh at you, then they fight you, and then you win. Of course, if a bank is reasonable, then either they will try to jump on the train and get at least build up the knowledge about what's coming as fast as possible and see how they will need to adapt their business model. Or they will try to fight it, as has been the case. Of course, now with the case of Binance, it's a little bit special since they also, they have chosen this headquarterless setup, which has caused many problems to regulators actually getting a good grasp on Binance. And like I said, the regulatory frameworks aren't there yet. They aren't well established, they aren't well known. So of course, there will be some precautionary measures that some banks might take. And this, I mean, this is also nothing really new. So banks have been very careful interacting with anything crypto related, maybe because of this narrative, and it's just a narrative, nothing more, that so much crypto usage is somehow related to money laundering. And yeah, I mean, that's how I see the whole thing. And long term, yeah, if there is going to be a fight, then this type of stuff is not something, will not be something unusual.
Mm-hmm. Very good. There are some more questions in the chat, but I think we'll move directly forward to our panel discussion. Thanks again for the presentation. Raffael, you'll stay with us. I'd like to shortly introduce our three other panelists who are joining us today from various locations around the global crypto world, so to speak. First of all, we have Ashley Lannquist. She is the project lead for blockchain and digital currencies at the World Economic Forum. Then we have Paula Pettit, head of business development at Linum Labs. And finally, also Noelle Acheson, who is newly the head of market insights at Genesis Trading. Previously, she was the head of research at CoinDesk. So a warm welcome to all three of you. Glad to have you with us today. Just following up on Raffael's observations and presentation of the themes paper, I'll throw this question out to all of you, because we see different aspects of crypto adoption, whether it's payments, it's remittances, it's now legal tender in El Salvador, but we know that maybe in developed countries, it's mostly about investments. And it's kind of hard to come to a clear-cut definition of crypto adoption. So in your opinion, or from your observations also from the work you've been doing, would you say this means that because there is no single definition or single metric, crypto adoption is actually expanding even more maybe than we can quantify? Is this something that's maybe escaping the notice of some people? How would you look at that? Maybe you, Ashley, can start.
Thanks, Ian, and thanks, Raffael, and thanks to Crypto Value Association for having me. Looking forward to this conversation. In terms of adoption, some of the things that I think we could talk about and try to measure really relate to getting past or really thinking about payments, perhaps, and use of decentralized applications and investments to some extent. And I don't really have the answer as to which one of those we should be monitoring, but investments alone to me doesn't signify adoption, because I think the cryptocurrency ecosystem, we think of adoption as more mainstream use to some extent for payments probably, or at least decentralized applications around the world. And I think part of the reason we don't have very clear data on payments usage beyond investments and dApps is, or part of the issue is that I don't think it's very high. I don't think cryptocurrency is being used very much for payments around the world. I could be wrong, but I haven't seen data that would point to that. Some things that I don't think we should use for metrics are total value locked in DeFi applications. Some of these terms get used sometimes, and that can double and triple count actual money in DeFi because of recursive lending, where basically just repeating the use of the same money multiple times to be counted in that measure. Or things like exchange volume in trading exchange volume. A recent academic paper by economists at Cornell found that 70% of the trading volume in unregulated exchanges, so basically non-US and other unregulated exchanges, is wash trading. So that's quite significant, of the exchanges trying to up their own trading volume by trading in their own books. So I'll stop there, but I actually wanted to mention that I think that there's two sides to the cryptocurrency story, and representing the perspective more of the World Economic Forum, I speak with a lot of policymakers, and I also do a lot of research on cryptocurrency for financial inclusion and for other use cases. And I actually disagree with a lot of Raffael's points. We can talk about those a little bit later, but I strongly disagree that there's an axiomatic argument for cryptocurrency being better for remittances. Actually, I just pulled up World Bank data on El Salvador, and it's only 1.6 to 2.9% to send money from the US to El Salvador using traditional means with fintech and Western Union and those providers. So you really have to measure, okay, what's the Bitcoin transaction fee involved here, and what's the exchange fee from going from US dollar to Bitcoin, then to be sent to El Salvador. And then in El Salvador, if there's an on-ramp, off-ramp exchange fee or other cost for its use in the economy, if it's not accepted because it's not required for everyone to accept it, then like all of those total costs have to be added up. I also think that there's a little too much of an emphasis on El Salvador being presented. I don't think there's any reason to think that it means there would be widespread adoption of Bitcoin even in El Salvador or elsewhere. For instance, there was actually a CoinDesk article that found that 65% of respondents in El Salvador said they would not want to be paid in Bitcoin. 46% knew nothing about Bitcoin, and only 20% approved of this decision. And of course, Bukele, the president there, is known for certain acts like bringing in the military to the legislative assembly to push his agenda, and Transparency International and the US have found him or several members of his administration as being corrupt. So we have to think about all of these factors. And then lastly, related to illicit use, even though Bitcoin, I agree, is very traceable for illicit activities, I'm not sure why it would be used. The FBI certainly has no issue finding those criminals. Monero and other more privacy-oriented coins are being problematic for ransomware around the world, and I think that's a serious issue. And I think, that shouldn't be forgotten about. Okay, I've said a few more things, but I'll probably stop here. Thank you.
Sure. Thanks, Ashley. Let's jump over to Noelle. Just coming back to adoption, right? How should we actually think about it? And maybe you have some to respond to also what Raffael presented, or some points that Ashley made. What is your perspective?
Thanks very much, Ian. Thanks for having me. A quick disclaimer, everything that I say is my opinion and not that of my employer. And one of the things that I love doing in our industry is picking on our semantics. We do have a very loose way with vocabulary, shall we say, and adoption is just one example, one of many examples of how we do play loose with the definitions of words. I'm going to disagree with Ashley on this. Well, I'm going to not disagree with her because she made some excellent points. I'm going to come at it from a different angle. I do think buying Bitcoin as an investment to hold is adoption. It is a use case. It is one of many use cases that Bitcoin and other cryptocurrencies can have, but it is a use case. So if you are buying to hold for the long term, then that is adoption. If you are trading derivatives, that is adoption. If you are interacting, in my opinion, in any way with the crypto ecosystem, then that qualifies as adoption. It's a fairly loose definition, but we don't even have a stricter definition when it comes to traditional finance. What defines adoption of fiat currencies? For instance, we don't even have any ways to measure how much money there is in the economy. It's all based on estimates. So adoption is growing. I think that was one of the premises that the paper was based on. Adoption of all types is growing. And the definition of adoption in some parts of the world is going to be very different from that in other parts of the world, but they are converging. I think, Ian, this is something that you mentioned. Also, adoption in the United States, in Chicago, for instance, to pick one trading capital, is different at the moment from adoption in Nairobi, shall we say. But as we saw when the riots, when the tensions escalated in Nigeria, when the central bank was talking about clamping down on crypto businesses, we saw that much of the youth that do not have access to employment opportunities are depending on crypto trading to make a living. So we're seeing some convergence there. And while Ashley is right, remittances are not a great use case for many corridors, they are still a good use case for some corridors. Some corridors are still very expensive. Costs are coming down for sure, but Bitcoin cannot be overlooked in that aspect. And we also know of many regions in the world where you just cannot send dollars, no matter what the cost. You'd be willing to pay them, but that's just not an option. Venezuela comes to mind, Iran is another. Different type of adoption for different type of use cases. But yeah, adoption is definitely increasing on all fronts in all parts of the world.
Mm-hmm. Thanks, Noelle. Then we'll jump to Paula. Just to follow up, you've had two different aspects. What is your view?
Awesome. Some really, thank you first for having me here. Some really good takes kind of all overall. I agree in many ways with both. With what Ashley and Noelle said, I do agree with Noelle that investing is a form of adoption. You know, when you have these huge players, you know, Goldman Sachs and all these big players starting to invest, that is a good sign. That is showing that, you know, these companies, these professionals are taking this seriously. And you know, that is a great stride from a couple of years ago when it was laughed at or ignored. That is huge movement. But then, you know, there is, I would say, the true mass adoption is when your masses are using it, and that is, you know, making it usable for everybody. And that's the portion that I'd say we still have some ways to go. You know, once my mom's holding it and she's spending it and everybody's just using it, yeah, I would say we have crypto adoption. It's absolutely growing. It's grown a ton this year. The amount of tools, the amount of things that are being built in it, the amount of people who are talking and investing in it, it's undeniable that it is growing. But there are many things that still need to be covered, I'd say, before we can have that adoption. I'd say some of the main things, we kind of touched on them, would be the fees. When you use them, you know, if you are primarily in fiat, which most people, let's be honest, still are, getting into crypto, getting it out, all of those aspects, you know, for remittances, that adds up. Any fees for, you know, things you do in it, those types of things add up. So, you know, working towards those to minimize those, as well as just general experience of using cryptocurrencies. They're very powerful and they're really great, but they can be scary to use still. You know, you're dealing with a, you know, 26 letter number address. You know, it can get lost, which, you know, we understand is part of it, but there is still a lot of things that if you're not in this space, you may not be ready to really dive into. So working towards making that more comfortable for even our non-tech friends and, you know, just your average retail user. Once we've solved some of those experiences, I'd say then we've moved towards crypto adoption. The last thing I'll say on it is we are moving towards blockchain adoption quite a bit. You know, we're starting to see that more in kind of like supply chains areas, other aspects, more utility-based aspects, and those are starting to grow. But just like cryptocurrencies, both have some things to kind of work out before I'd say they're just truly implemented everywhere, but we are working towards them. And I'd say this past year, there has been a ton of growth. So I definitely believe it's coming.
Mm-hmm.
Actually, Ian, if I can add one tiny thing,
Sure.
The NFT craze, the big thing about the NFT craze was that's mainstream adoption. You've got Gucci, you've got Sotheby's, you've got industries that would not normally look at crypto assets, interacting with crypto assets dressed up as NFTs. So even just from that, you know, we're seeing a spread.
Mm-hmm.
Yeah, and jumping off of one of Paula's points, I think consumer protection could be discussed a lot more. I mean, I've lost more than $10,000 of cryptocurrency from wallets, passwords that I can't recover, and I've been working in the space for many years. So we're talking about extending this to the financially vulnerable. I think, yeah, that issue needs to be discussed a lot more. Of course, Bitcoin and cryptocurrency price volatility can also harm people as well, even if they keep all of their keys and everything secure. So just wanted to add that in. I think the industry talks a lot about these positive aspects and doesn't pay enough attention to consumer protection.
I'll come back to Raffael now on 2 points. One, we talked just briefly about metrics. You published recently one of our Bitcoin Suisse Decrypt episodes about the state of the Bitcoin and Ethereum networks. And there was one interesting stat in there regarding smart contracts. I believe that was the last illustration in that article, something like 320 verified smart contracts going live on the Ethereum blockchain every day. Is that right? Or
yeah, I don't remember the
average?
exact. Yeah, it was a number every day, but I think it was a bit lower.
Okay.
It was like 85 or so.
This ties in a little bit to what Paula mentions about blockchain adoption going beyond purely financial, shall we say, necessarily usage. That's also another metric and something to see, which is interesting. But then that ties into some of the barriers, which we also see when it comes to fees and so on. Let's jump quickly to El Salvador, just because this came up. This was the start of what Raffael presented. I am no policy expert or international finance expert, but I understand El Salvador has up until now mostly had a monetary system based on the US dollar. That may have some advantages. Surely when it comes to capital markets, it might also have some disadvantages when it comes to being tied to actions by, say, the Federal Reserve, which a company like El Salvador has no control over. Is Bitcoin adoption and kind of the freedom narrative now come to a different level when you think about not just people being able to send money when and how they want without a bank account, but perhaps countries having some more independence from other factors which might influence their economies? Raffael, is that a false narrative, or is there some truth in that?
I would say we mostly don't know exactly yet. I mean, it's so new what El Salvador did. They were the very first ones to do it. I would say it's a rather brave step. Some voices have also just claimed, yeah, it's a PR gag, and they just want to somehow get the innovation and some of these crypto people going in El Salvador, attracting them to build stuff there. So I would say overall, we'll just need to see how this all plays out. And of course, we have seen this backlash from various sides, various policymakers deciding not to help them. I think also the World Bank issued a statement that they will not help in the implementation of this. So of course, there are going to be roadblocks on the way, and I'm not sure how fast we'll see some other country do the same as El Salvador did, or if they just choose another way to include crypto in their economy. And I think overall, yeah, it all comes back basically again to this question: where is the value actually? Where is the value created? Where can the people in their everyday lives benefit from it? If El Salvador shows, okay, this is actually something that the people like to use. Most of the people there, I think, are using the Lightning network also to some extent with Strike, and so we just have to see where this all leads. I mean, in terms of this type of adoption, we're still very early. Maybe not as early. We're maybe not as early in terms of the investment type of adoption, but I would definitely agree that mainstream usage is not here yet. So and it's like Ashley also mentioned, consumer protection is still a big thing, which is, for example, why some more modern wallets also allow for things like social recovery, which is something that I think could play a very important role. So what this actually is that instead of just having this 26 your seed phrase of 24 words, or you would actually have people that could help you restore your wallet if you lose it. And I think it's those simple things that could actually lead to a breakthrough at some point if they start to take off. And if you don't have to be scared to lose your money every day, or that you could even have some functions like withdrawal limits on your wallet, so that even if you get dropped, you will not lose your entire net worth, but just a small part of it that you would have used anyway. Then I think that's something certainly worth considering.
Mm-hmm. Back to you, Ashley. You had something to add there?
Yeah, and to reply also to Ian, so El Salvador moved from its local currency to the dollar in 2001 because it was experiencing inflation and it wanted to avoid inflation. Hence, it chose the US dollar, which has a stable price level in recent decades. And it also thought that USD would help it trade more with the United States. I haven't seen the data, but I imagine that probably did help. It's totally unclear to me what benefit the use of Bitcoin would be for most citizens in El Salvador. It seems like, if anything, the key point is that it would increase their transaction fees. Certainly, Bitcoin volatility easily has 100% standard deviation or volatility month over month. So that, they could lose the value of their savings and pay higher transaction fees. I don't know if I'm missing something.
Noelle, Paula, do you want to respond to that?
Yeah, I definitely agree. I mean, I think it's a very interesting experiment, and I kind of hate to say that, but I also feel like it is an experiment where, we're just dropping Bitcoin in there and seeing like how that, performs. In the best case scenario, it works well and Bitcoin continues to go up and El Salvadorians get access to that, and it pushes them above some of their neighboring countries. That is a good case scenario. In some of the poorer case scenarios, the transactions, the adoptions internally, I just don't, we'll see. It's only been a little over a month since it's been launched. We'll see how that goes. I mean, I do definitely believe governments and countries will move towards adopting cryptocurrencies. I mean, at the end of the day, it's a technology. It's a technology that's more efficient, can, move quicker with less infrastructure, depending on the network, have less fees. I know Raffael mentioned it briefly in his presentation, CBDCs. I won't dive too deep into them, but I could see a world where we start moving to CBDCs, which is basically central bank digital currencies, which are issued by their local governments that are tied to their local reserve, but it's built on the blockchain. China's starting to do some of those. They're doing a pilot project over these upcoming years to do that with their currency. We'll see how that plays out. It does, in some ways, help them, if it works, create a more global currency, because it allows, if they are able to digitize their currency, it allows disenfranchised people from other countries be able to buy into that currency. Their citizens who may not have bank accounts be able to buy in it, and it actually allows much more people to buy into this currency, which it could, is very strong for a currency. So I do think we will see, crypto financial systems in governments, create kind of this global system, whether it's actually Bitcoin or CBDC or something in the middle. I think that's still to be determined.
Mm-hmm. Noelle?
And to add on to that, Paula is right. It's an experiment. I think Raffael inferred this also. It is an experiment, fascinating experiment, what's more. But in terms of the transaction fees, they are precisely one of the reasons Bukele wanted Bitcoin to become legal tender, because the transaction fees on Lightning are orders of magnitude lower than the transaction fees on the US dollar in the country. And the transaction fees on the US dollar were draining the reserves, plus the dependence on a monetary policy, totally not yours. And volatility is a short-term phenomenon. It's much, much higher in Bitcoin than in the dollar, for sure, than Bitcoin and just about any other non-crypto asset, much, much higher. But volatility over the long term, anyone who's investing in Bitcoin for the long term is expecting it to hold its value a lot more than, say, the dollar or any other fiat-based asset. That's one of its investment premises. So the volatility, those investors in El Salvador that are worried about it will convert out fast. I mean, that's a facility that has been offered. And the transaction fees on Lightning are negligible.
But the monetary policy of Bitcoin is totally determined by the Bitcoin network, and El Salvador wouldn't have any control over that either, right?
True.
And because they can't affect the supply of Bitcoin, when the demand for it moves, you have all this price volatility. So I think, El Salvador could adopt another currency or revert to its own currency if it wanted to control its
It could, but you do still then have the monetary policy issue. El Salvador hasn't had a great track record on that, and being beholden to the monetary policy of another nation with perhaps conflicting interests at times is politically uncomfortable for many. So the Bitcoin adoption was, in part a political measure.
Mm-hmm. Let's stick to that point, and I'll take one question from the audience. This will come maybe slightly to Ashley, but also touch on the topic of central bank digital currencies and adoption beyond just Bitcoin. We've talked about how cryptocurrencies now move forward in different use cases, but then that also leads to adoption of the underlying technology, blockchain. Then central banks explore blockchain or DLT for central bank digital currencies. One of the aspects which is often highlighted is transparency, and the World Economic Forum, perhaps with its influence and its focus on transparency and moral integrity, would of course encourage this. Is this an aspect of DLT being used by governments and by global monetary systems or global superpowers, which is good? Could we say that Bitcoin, like through the back door, encourages more transparency among governments?
Yeah, I saw the question. Thank you. And I was typing a reply,
Oh, okay.
so I'll answer here. I actually lead the World Economic Forum's work on both CBDC and blockchain for anti-corruption and government transparency. And I led the authorship of a report that's, I think to my knowledge, the deepest analysis of blockchain for government transparency that's ever occurred. I have it up on my, I have it up on my computer. I don't see a chat place to drop it in. But yeah, it's called
Send it to us afterwards. We'll make sure we can share it. Yeah. Mm-hmm.
This was done with the government of Colombia a year or two ago, and with its Inspector General's office. So I think DLT, particularly public permissionless blockchains that have a lot of nodes participating in them, so they have higher security, is really is quite high potential for anti-corruption and government transparency use cases. I think that's really where you get the benefit of blockchain. Situations where you want to eliminate any risk of corrupt anyone, government officials, from altering records. So it is interesting to think about what kind of data we could put on blockchain, public permissionless, again, in my opinion, that where it's vulnerable to censorship or it's vulnerable to manipulation by government. And yeah, that could provide useful transparency. I don't know if I would go far as saying, or rather, it's unclear for me to tie that directly to cryptocurrency and Bitcoin. Of course, if actors in government are paying in Bitcoin or cryptocurrency, everyone would be able to see that. So you get some transparency there, but that would involve a lot of other issues, several governments with corruption issues also have money laundering issues, and the governments there, for instance, this was the case in Colombia, are very hesitant to deal with cryptocurrency because they could be blocked out of participating in global trade and come under a lot of scrutiny for illicit activity that could also happen with cryptocurrency. Whether or not, to what degree that actually happens, different conversation, but there's a perception there. Yeah. Related to CBDC, to the extent that public spending occurs with CBDC and that information is on a publicly visible, very secure tamper-proof ledger, then I could also see how that would improve transparency. But I don't know how much that's going to happen, and I think it's very possible many CBDC implementations don't use blockchain, and if they did use blockchain, they would probably very, very likely be private permissioned chains, not public permissionless blockchains, because of scalability, lack of control, security vulnerabilities, etc.
Mm-hmm.
I just want a small tack onto that. Yeah, I definitely don't think it would be completely public CBDCs, because you can't have everything being shown. I know some were looking at kind of hybrid solutions where certain types of transactions were public and certain were private. The specifics of it, I don't exactly know, I will be honest, but making it so government spending, sure, you can see what type of does it go to the parks? Does it go towards this infrastructure? You can see the spending go that, those specific routes, but maybe you don't see what each employee makes, because at that point it becomes private data. And if it's built correctly, you can create a hybrid solution of sorts, but it definitely does need to be built correctly with, a government that has the people in mind and aren't corrupt. So I don't think it would be public or private completely is all I wanted to say primarily.
Noelle, did you have anything to add there?
I do. It's a fascinating topic, and I actually agree with Ashley and Paula in that It's not going to be on the public blockchains, but there's a question, will it even need to be on a blockchain? If it's going to be private, then why not just use the similar system that we have now? I understand why there are many advantages, but I'm sure there are many people in positions of power who are looking at that particular use case because it does imply a certain loss of control. Flipping the transparency on its head, there's also the questions around how much insight do we want to give the authorities into our personal transactions? And I think that's also where the hybrid solution that Paula's been mentioning could perhaps end up being part of the solution. Another question is the politics. Again, much like El Salvador's position on Bitcoin is political, so will the CBDCs end up becoming political, especially given the increasing likelihood that China will be the first major economy to launch one, and its approach to privacy tends to be somewhat different from many of the nations that we live in. And that could end up conferring a certain competitive advantage to it, an efficiency advantage and a control advantage in terms of economic profit and global power.
Mm-hmm. We'll wrap that part of the conversation up. I have one question or comment from my side, which will maybe lead us into perhaps the last question of our session.
I'm curious as to what Paula was about to say.
Oh, yeah, the one thing I was going to say, thank you. The one thing I was going to say is one of the reasons China was looking at the pilot for CBDCs is the amount of transactions that happens on their infrastructure is obviously huge because of their size. They were able to, by using the CBDC, process 92,000 transactions per second on it, which other countries need like an entire day to process that many transactions. So there is some efficiency things that come through it. I was like searching for that stat, but.
Yeah, and I think like sometimes people attribute nefarious motivations of the PBOC for CBDC, and I won't, I'm not in the position to speak on all of their motivations, but one very evident one that's globally relevant that many policymakers also in developed economies think about is that CBDC can provide a competitive counter force to monopolistic payment service providers or even commercial banks in an economy. So with China, you have a duopoly where 90% of payments are by the two major providers. And so one of their motivations could easily be challenging that duopoly, which can provide services with potentially lower fees, better services, et cetera, just through that healthier competition of the CBDC.
That's especially relevant in the United States now with the antitrust measures that Biden is focusing on, and the fact that we are starting to look at the influence that technology more broadly has on our individual lives.
So one thing that we noticed in some of the data that Raffael brought up in the paper is that the Ukraine and Russia are both countries which have seen quite a lot of activity in cryptocurrencies. Now, you could perhaps attribute different motivations to that. As a person who lived 9 years in an Eastern European country in Poland, also spent some time in Ukraine, I can say one thing that is quite true from my experience with people there is that there is a large distrust of the government and of their actions on a general level. This is one factor which is often brought up for the adoption of cryptocurrencies, or at least the interest in cryptocurrencies. Do you think this is legitimate? And is this a factor, because we do see some elements also, say, in the United States or in other countries where trust in centralized authorities among people, maybe not among a certain other institutions or companies, but among people on a grassroots level is dropping. And is this a strong factor? Will it continue to grow? And then the follow-up question to that, which we'll round out with, what other factors do you think could contribute to greater crypto adoption? Maybe we'll go back to Noelle to start with.
I think trust is such a fascinating aspect to bring into the equation, especially since Bitcoin was built around that very concept, and especially after what we've all lived through over the past couple of years. The Edelman Trust Barometer, which is a fascinating read always, I think especially now, came out in January, showed that trust in governments is not just declining in some of the countries you mentioned, Ian, but trust in governments is declining notably in countries such as the United States, the United Kingdom, Germany, Canada, and many other areas that we would call the developed world. So this is not just an emerging economy phenomenon. We're seeing this also in the headlines every day with increased violence on the streets because of various triggers. And this is all part of the general shift that we have seen since before the pandemic, since even before the great financial crisis of 2008, of decreasing trust in centralized authorities and in the establishment, largely triggered by the growing inequality, accelerated by the pandemic, which was the great accelerator of all accelerators. And yes, it has in that way influenced the adoption that we talked about earlier of cryptocurrencies. Many people living in oppressive regimes are seeing cryptocurrencies not just as a way to transact outside of the eye of the authorities, but also these countries often have inflation, growing inflation. So often it also is a way to protect your future savings against that. And sometimes it is just a preparation for a time, perhaps when people need to move. And this is not just a political question. We know that climate change is going to bring great havoc on the world at some stage, especially in terms of migration. Cryptocurrencies offer a window into a hopeful future for many people that have not had that kind of a choice, that have not had that kind of a tool in their toolbox over the past few decades. So in summary, trust is the key. We are, all of us, trusting less the centralized authority, not just my generation, but also Generation Z. They were born digital. They don't have trust in the establishment. We at least have the mentality of this is how it's always been, this is how it always will be. Generations coming up behind us don't have that. And they also are much more internationally minded, much more open to the possibility of a totally different future, especially after what they've lived through over the past couple of years.
Mm-hmm. Let's go over to Ashley, and I'll just mention before you start, you sent a paper from the Bank of International Settlements before the session today, which was exploring some things from the US side. Interesting to note, if I read it right, that people who have shown an interest in cryptocurrencies also have shown relatively high skepticism in cash, which is kind of an interesting correlation. But on the trust issue, how do you see it, and what do you think could or would potentially drive adoption of crypto and blockchain in the future? I think you're still on mute, Ashley.
Related to trust, I certainly agree that it depends where you are, and there may be some governments where the citizens don't trust their governments or financial institutions or whatever it may be as much. The data set that you were referring to, there's a new paper by Raffael and David Tercero Lucas at BIS. It uses US data only. That's because that's the best data and the most reliable data that economists could find. They found that cryptocurrency users in the US are on average educated, young, male, and already experienced in digital finance. That they show no difference in their level of security concerns with the use of cash or commercial bank services compared to the rest of the population. So they're not more suspicious of cash or commercial banks. But compared to non-cryptocurrency owners, as you were saying, cryptocurrency owners do tend to find cash and traditional banking services a little less convenient, although not the case for online banking. So I think it's mostly driven by other motivations like investment, wanting to participate in this trend, perhaps. In terms of what will improve adoption, I think there are several barriers to adoption, especially when we talk about financial inclusion. This is a bit of a side point, but because I focus on that topic, I think about this a lot. And some conditions that have to be in place would be a tolerant regulatory regime, lower transaction costs in general, lower transaction fees, lower volatility of the cryptocurrencies. Of course, if you're using stablecoins, that's not an issue, but you have to be confident then in the financial management of the stablecoins. More prevalence of exchanges or these on and off ramps, as I believe Paula may have mentioned, and internet, electricity, smartphone access, computer access. You can't use cryptocurrencies on feature phones because the byte size of transactions are much too high for what would be tolerated with feature phone messaging. Digital and financial literacy. So these are all barriers to financial inclusion that exist around the world today that still exist for cryptocurrencies. And of course, for any adoption, having these conditions that would be useful, but like we're talking about countries where they're not already connected to the banking system. They currently face a lot of barriers, the same barriers to access cryptocurrency as they would to access the banking system. So for instance, I would disagree with an earlier point from Raffael and the report saying cryptocurrency is a bank account in your pocket. There's a lot that needs to be done for someone to access cryptocurrency and to also use it responsibly without losing their money. But maybe those things will all develop. I don't mean to sound too pessimistic, but it will take ecosystem development, education, literacy, and exchanges to also behave in a way that is more protective of consumer funds, where you have these exchanges where the owners run off with consumer money or illicit activity is happening. That's why regulation is trying to get on top of them, etc.
Mm-hmm. Okay, so slightly pessimistic, but maybe not totally. I don't think you'll write crypto off 100%. Thanks for that, Paula. And
I own cryptocurrency, for the record. I'm just a little bit fatigued of arguments that I think we've been hearing since 2017 about mass adoption when these obvious barriers still exist.
Sure. Okay. Fair point. Fair point. Good. Paula, and then Raffael will finish up.
Yeah, so I think there were some really, really good points from both sides. I do tend to agree with Ashley, actually, on quite a few of her points. I would call it like less pessimistic, just a little bit, just realistic, just looking at the situation sometimes. I heavily believe in cryptocurrency, but I just do know the issues that we face when I'm trying to get a friend onboarded. It's not an easy task. But what I want to add is I do agree that, in some of our developed countries, the people that are adopting cryptocurrencies, I'd say maybe like if you check the demographic in 2014, I'd say sure, they were, much more distrusting of governments, and, it was to be outside of the government and everything like that. But with the amount that it's grown over the past year and its interest in investments and everything like that, the demographic has shifted quite a bit to it just being people that want to invest in it and are interested in the technology that is starting to balance it out a little bit more. And it's not looking that different from your traditional person as far as their trust against their government. How that plays out in more developing countries, that is probably a little bit different. Countries who have, there is reason to be skeptical of, even the US government, the UK government, some of these, but they are a bit more established. But when you go to, of course, more developing countries, that there's not just some thought that you should be distrusting of your government, you should not trust your government. There, sure, I can see a lot more reason for that to be the push into cryptocurrency still at this point. But yeah, I think it is starting to lose that tie. However, Bitcoin and cryptocurrencies for many years has been touted as a hedge against the dollar. It was always said that it was the doomsday currency. When everything went down, you could have your Bitcoin. And whether that's a self-fulfilling prophecy or not, I do think that does happen a little bit. So when, they were running the Capitol back in January, I think Bitcoin popped up $10,000 in that day or two. It went from 24 to 35, somewhere in that range. And for me to think that those were not connected, I do think that there was something in there. So it still ties in. I just wouldn't say it is the major driving force anymore. But also tagging on to what Noelle said, I do agree that these younger generations are going to be a good push for it as well, because they are more internationally focused. They do trust less in their governments, and that's not to say that they're trying to escape their governments with Bitcoin, but it just means that maybe they're okay looking for alternatives. Let's just check out what's out there. And they're just more tech savvy. So I think we are going to see some growth there, but I think there was a nice variety of really good points here that I just wanted to touch up on.
Thanks, Paula and Raffael. A closing thought: distrust, is it still actually a driving force in crypto adoption, or not so much?
Well, I will basically agree. It's I would say the importance of it has become less over the past years, and it's now much more your traditional investor. But one other thing that I would like to mention is that we always think in terms of adoption, like we see the prices going up and down and crazy, and people then think, oh, okay, now something must be happening, right? And yeah, maybe something is happening, but in general, adoption is something that takes time and then happens very explosively. And I think we are not at this point yet where this explosion is happening. But if you look at the adoption curve, it's usually some type of S curve that is basically linear for a very, very long time. And you can see this just if you look around, people, especially young people, don't have such a large problem. Like, of course, it's a little bit hard to get people onboarded into crypto, but once you get the hang of it, you actually quite like that you can also send your money around on a Sunday, and the person gets it instantly, more or less. And that you don't have to get some sort of permission if you want to send maybe a little bit more money and so on. And I think those are some of the factors. So to some extent, it will come natural to people that yeah, also grow up with it, and then it's just something that has always existed. So it's also some sort of generational shift, and these things just take time. And markets are always very enthusiastic, and then people think, yeah, now is the time, right? It has been the same in 17. It's maybe a little bit the same now, although I have to say, just on this linear progression, we're much further ahead now, I would say, than we were 4 years ago. So that will be my closing statement in a little bit.
Mm-hmm. Very nice. With that, I think we're going to wrap things up. Once again, thanks very, very much to everyone for joining the session today. I hope it was a good discussion for you as well. Thanks for the points that everybody brought. I have to say, on the crypto adoption side, just for myself, I had a conversation a year and a half ago or so with some friends from the western part of Switzerland, very conservative people, very traditional, living on a farm in western Switzerland. Never in my life would have thought that they owned crypto. But when they found out what I was working in, suddenly it came out that they had bought Ethereum 2 or 3 years before that. So there's perhaps some element of statistical adoption that is still out there, not measured yet, hard to know. I guess we'll have to wait and see. So thanks again, all of you, Ashley, Paula, Noelle, and of course, Raffael, for joining us. Stay tuned. We hope to bring you another themes, paper, and event like this in a few months in the next quarter. And wishing you all a good afternoon, good evening, wherever you are, and stay well. Thank you very much.
Awesome. Thank you so much.
Thank you all.
Thank you so much, Ian. Thanks, everyone.
Yeah.
Bye.
Goodbye.